Good morning, everyone. Thanks so much for joining us today. This is our first national webinar for 2024. I'm Nikki Jovicic from LookUpStrata, and I'm also the Managing Director of Tower Body Corporate on the Gold Coast. I'm your host for this webinar, and we welcome back Tyrone Shandiman from Strata Insurance Solutions and Chris Irons from Strata Solve. Tyrone and Chris are speaking today about legal claims in Strata Insurance. Tyrone Shandiman will look at insurance coverage and provide a comprehensive understanding of committee considerations, and this will include a detailed exploration of the claims process and potential implications of claims on future insurability. Chris Irons will offer insights into proactive strategies aimed at minimising the likelihood of insurance claims, including risk mitigation and sensible decision-making, plus practical and actionable options to reduce costs when you do have a claim. Before we begin, I'd like to mention that the information in this session, including the discussions arising from submitted questions and chat conversations, is not legal advice and should not be relied upon as advice. You should seek independent advice before acting on the information contained in the session. We welcome back Tyrone Shandiman from Strata Insurance Solutions. Tyrone is a seasoned professional in the insurance industry. He embarked on his journey in 2004 within the financial services sector. In 2011, he established Strata Insurance Solutions, transforming a garage startup into a reputable firm focused on strata insurance and servicing over 700 clients. Tyrone's role extends beyond managing operations and tackling complex insurance matters. He also founded the Australian Consumer Insurance Lobby, which focuses on consumer rights within the industry, in the insurance industry. His efforts and expertise have been acknowledged with numerous industry awards, including being recently named an Australian top brokerage by Insurance Business Australia magazine. And we welcome back Chris Irons from Strata Solve. Chris is a Strata unicorn. He's not a Strata lawyer, manager or caretaker. He was Queensland's Commissioner for Body Corporate and Community Management for over 5 years. That is the only role of its type in the world. And Chris is also an owner in one Strata scheme and a tenant in another. As Director of Strata Solve, Chris focuses on communications and strategic advice rather than legal action to solve strata problems. Strata Solve works with owners, committees, strata managers and caretakers to tailor practical solutions to stressful strata situations. Chris holds an honours degree in communications and is nationally accredited mediator. So we're really glad to welcome Tyrone and Chris to today's session.
Great to be here again, Nikki. Thank you.
Yeah, thank you for having us, Nikki. And look, I actually thought I'd start with the context of today's presentation. And I invited Chris along to speak with me because I get many of my clients who have a legal issue that come to me for advice. And my advice is limited to insurance broking advice and insurance considerations. And quite often in these particular claims, there are quite a lot of nuances and complexities, and that's why what I wanted to do is to create a webinar for people that are not only considering insurance cover under their policy, but what happens when they have a legal issue and legal dispute in strata. And I feel that Chris's knowledge in this field is very important. So in today's presentation, I'm not going to give a full readout of this particular slide, but I just want to say that we're going to go through considerations when you're taking out insurance, but also to what to consider when you have a legal issue. Thank you, Chris.
Thank you, Tyrone. Tyrone, 24 years in insurance. Were you 5 when you started in insurance? Wow. Thank you. All right, very, very quickly for everybody, when I speak about legislation in this webinar, I'm speaking only about Queensland's legislation. That's the legislation I know. The concepts, though, and Tyrone and I have spoken about this, a lot of the concepts that we talk about today will be relevant on a national basis. So when we talk about strata insurance, one of the key features of it is the fact that it is mandatory in Queensland. There's no option for a strata scheme to not be insured. And that's an interesting difference to owning a house, isn't it? Because if I own a house, while it would be really foolish of me to not be insured, technically I could be. It is provided for under Part 6 of the standard module in Queensland and equivalent provisions of other modules. My apologies there, can't speak. Tyrone, I might hand back to you at this point to expand a little further on some of the details.
Absolutely. So look, in addition to the requirement to insure a building for full replacement value in all legislation around Australia, legislation also has a requirement to have public liability insurance. And this is the only mandatory legal cover that a body corporate is required to have. Now, in Queensland, we look at it, it's 10 million, but in other states like New South Wales and Victoria and other states as well, it's 20 million. So it's between 10 and 20 million is the limit for each body corporate. Now, in the context of strata insurance, there are 4 different types of covers that you can get for legal disputes. And the first 3 on this screen are the typical covers that you will see in a strata insurance policy that most body corporate buildings will have. The final one I'm going to talk about a little bit more is a consideration of management liability and why you might consider this cover. But firstly, I wanted to talk about legal claims against the body corporate. And the strata insurance policy will have a section called legal defence expenses. Now, it's important to emphasise a couple of things. This covers defence costs only, so it doesn't cover settlements and judgments. And it is designed to cover claims made against the body corporate, not claims the body corporate initiates. And most policies will have cover between $50,000 to $100,000. Now, I want to make it very clear that if you're having a legal issue, the way that you manage that particular issue, particularly if it's something that's very important for the body corporate, can ultimately determine whether it's a matter that you pursue or the other person pursues. So I would highly recommend that you consider this when you're considering certain legal issues. But notwithstanding that insurance policies will have exclusions for deliberate acts, and likewise, they will have exclusions for defending claims contrary to legal advice. And I wanted to put the first point up there that insurers require you to demonstrate that when you are defending a legal claim that you have prospect of success in defending that matter. If it's simply a case that what you're being asked to do is in accordance with the law and you should be doing it, then an insurer is not going to pay a legal defense for a baseless defense. Now, office bearer's liability. So this is a little bit different to the body corporate cover because it has quite a greater extensive level of cover. So it covers the body corporate, it covers an office bearer, which is a committee member, not only for defence costs, but it also covers them for settlements and judgments. In the previous slide, the defence cost limit was 50,000. Well, this is much more expensive. For most of our clients, they have cover for both of these things for between $1 to $5 million. Now, a couple of things that you should know about this section. So first and foremost, defamation is excluded in most policies for insurers. And this for me, I'm a little bit disappointed that insurers are excluding this. I have seen in my time many instances where someone within a body corporate community will use defamation as a way of intimidating people out of possibly out of not being a committee member or in a particular matter. And I've seen a lot of baseless defamation claims come before my office bearers, and I'm going to talk a little bit more about some considerations around what you can do in light of this exclusion. There is also, as we spoke about earlier, you must maintain insurance in accordance with the Act, and there's an exclusion in some insurers for failure to maintain insurance. Likewise, there's exclusion for fines and penalties, gaining a personal profit or advantage, or conflicts of interest.
Tyrone, just on that, if you don't mind, on that second point about failure to maintain statutory insurance. So in Queensland, and I think there might be some similar provisions in other states as well, a body corporate, if they cannot obtain the required cover due to lack of availability or for potentially other reasons as well, they can apply to Queensland's Body Corporate Commissioner, my former role, for what is called alternative insurance. That's effectively a sanction for not complying with the requirement to insure. So, Tyrone, it would stand to reason, wouldn't it, that if a body corporate is in that position where obtaining insurance is a real challenge, obtaining that statutory sanction would be a potentially advisable step as a defence against that failure to maintain.
Absolutely. But I would like to point out that there is nothing to stop someone from suing someone on a baseless allegation, right?
Yeah.
And you see, when someone has had a major loss and they've lost their, their livelihood has been severely impacted by a major event, they may make a claim against a committee member that has no basis. But even that allegation itself could be excluded by the policy. But yes, what I would highly recommend is taking all the steps you can to demonstrate your actions were reasonable as an office bearer, correct? I'm not going to spend too much time on this slide, only to say that there is public liability insurance in policy wordings. It responds to legal claims associated with injury and property damage. I've mentioned the limits in previous slides, but the things that I just want you to know are two things, and these are really important considerations. So first and foremost, we sometimes see claims under the property damage section where an insurer might deny a particular claim because someone has not undertaken appropriate maintenance actions. It's important to note that if that particular claim is denied under the property section, it doesn't mean it can't be considered under a public liability section. And for example, if there's a leak on a body corporate property and that causes damage to the body corporate's property, and the owner writes a letter of demand to the body corporate, although that claim is denied under the property section of the policy due to a maintenance exclusion, there is no such exclusion in the public liability section. So there could be a potential that you can consider a claim under this section of the policy. And secondly, I just wanted to point out that defamation against the body corporate is not excluded in most policies. And if you're in a very hostile environment where there's a very high risk of defamation claims, particularly baseless ones, the way to overcome being personally pursued as an office bearer is to put a motion to the committee and ask that the body corporate make a certain statement as opposed to you doing it yourself. So that's just one consideration for you to consider.
It's a really good point, Tyrone. It emphasises again, even though it should be a no-brainer, that everything that happens in Strata is a joint decision. There are very few instances where decisions are that of the individual.
And the best thing you mentioned previously, Chris, is just to not make defamatory statements at all. That's always the best way of
just shut your mouth.
Yes, absolutely. Now, I wanted to talk about management liability insurance today, which is a separate insurance policy that I would say that 99.9% of strata buildings do not have in Australia. But in light of some particular issues that I've raised already, these policies can be a viable consideration. Now, these policies cover legal claims against both the office bearers and the body corporate. They cover defence costs and settlements, and you can get cover up to $20 million. Who might consider this? You might be a body corporate that is concerned that the $50,000 limit for defence costs is simply not enough. And I've come across many claims where that limit is well and truly exhausted. You might be a body corporate where you feel that you're in a hostile situation with various parties. You might be considering a contentious decision. You might be someone that is concerned about the lack of defamation cover for office bearers, or you might just want to be able to be more assertive in your decision making and having the confidence in knowing that you've got a policy that will support you if there is a legal dispute. But in saying this, I want to stress that there are exclusions that apply for known, existing, or foreseeable issues, and you must disclose all relevant matters to the insurer before you take the policy out. And in the context of this, I just want to say the best time to take a policy out for management liabilities is when you don't know that there are any issues. The worst time you can take it out is when you've got people that are writing legal letters to you and you're hoping that the insurer is going to cover your claim, which they will not do. How much does this policy cost? I've recently did one for one of my larger buildings. It was around $1,500, and I haven't seen one cost more than $3,000. So when you're looking at the context in the context of expense, it actually isn't that much. And I just want to highlight as well, because in Queensland particularly, I see a lot of contract disputes with the body corporate and on-site managers. There can be limitations in policies for contract disputes, and if that is a particular concern, then you should speak to your insurance advisor when you're taking the policy out about that issue.
Thanks, Tyrone. I think this one's me now. So given that the content of this webinar is about legal claims in Strata, Tyrone and I thought it was probably a good idea just to have a quick reminder about what sorts of things we're talking about when we're talking about legal claims in Strata. So again, reminder, this Queensland specific reference to legislation here. It may be similar in other states and territories. So in Queensland, a body corporate can only start a proceeding with what is called a special resolution. And special resolution, very, very simplified, is roughly 3/4 yes votes. There are exceptions to that, though, and those exceptions listed there in that slide for what are called prescribed proceedings. For example, if it's a debt recovery process, there's not a special resolution required. Initiating dispute resolution proceedings in my old office, the Commissioner's office, also not required to have a special resolution as well. And again, I just want to re-emphasise the point Tyrone made earlier. When we're talking about defence for legal claims, it's not about those things that the body corporate initiates. So if the body corporate wants to appeal an order or enforce an adjudicator's order in Queensland, those would be things that a body corporate would initiate, and as per what Tyrone said before, would not be covered under that kind of insurance. Then I think we've got one. Yep. Next one. Continuing on the quick refresh, in Queensland, the Commissioner's Office has what's called exclusive jurisdiction. So pretty much every dispute, every legal proceeding about Strata in Queensland will be handled through that office. There's no capacity, for example, for somebody to say, I'm going to sue you if they have a Strata dispute. It has to go through the Commissioner's Office. The legislation requires that. Couple of qualifiers, and I've just listed a few there on the screen. The so-called complex disputes, these are contractual issues. So contractual issues in relation to a management rights holder and a body corporate, that's a pretty common one. Less common, but it still happens, a contractual dispute between a body corporate and a strata manager. Again, about performance of duties. Those kinds of matters will generally be determined in the QCAT, Queensland Civil and Administrative Tribunal. There's also a provision under Queensland's legislation for damage, and that is very different from the concept of damages. So damage, we're talking about physical damage, and a good example of that might be a situation where there's a leaking pipe in an underground garage and the leak damages an owner's car. The body corporate can be responsible for that, and an adjudicator can order reimbursement for damage. But damages might be something like loss of rent, where a lot is uninhabitable due to a water ingress issue. The Commissioner's Office cannot handle that, and that then leads to the third dot point, what are called Section 250 dismissals, where then would need to be the Commissioner certifying that that issue needs to be determined in a court or a tribunal. And as I touched upon before, there are then appeals and enforcements of adjudicators' orders in Queensland. A good reminder, regardless of the kind of legal proceeding that we are talking about, any outcome of the Commissioner's Office, and indeed any outcome of those other courts and tribunals, which results in an order or an outcome or a decision, that's on the public record. That is available to any prospective purchaser and indeed their agents, search agents and other parties as well, and can absolutely be a major factor in property values. And if you think about it this way, if you go along, you're interested in buying an apartment in a body corporate and you see that there are 4 or 5 recent adjudication orders, all of which appear to be very challenging, and as Tyrone said before, in a hostile environment, that prospective purchaser probably won't want to purchase that apartment.
And Chris, can I just ask, with the issue, if you're seeking rent, does that then go to QCAT? Is that your understanding?
Usually, depending upon the amount of rent, Tyrone, usually it would be the district court. You think about it, if a lot is uninhabitable for 12 months due to water ingress, and that's actually, unfortunately, not uncommon. I've got a couple of clients who are in that scenario at the moment. The amount of lost rent is really significant over a 12-month period. Yeah.
Excellent. Now, what happens when we get claims? And it can be a very distressing situation for a lot of my clients. And I want to provide some clarity around some things you should consider when you have a claim, all right, and what to expect. The first thing I advise my clients is, so when you lodge a claim, the claim will be submitted to the insurer, and they will go through a process where they assess the claim, and they provide what they call indemnity for the claim, where they effectively say, yes, in principle, this claim is covered, and then they will then start the process of a defence. Now, when I have a client contact me for a claim, the first thing I say to them is read the section of the policy wording that applies. And most policy wordings might be 60 or 70 pages long, but the legal defence section of most policies are less than 2 pages, and it's a 2-minute read. And I think that that's a really important thing to do when you've got a claim, to understand what is and isn't covered in the policy. Now, while the insurer is going through the assessment phase, we recommend that consumers do what we call acting as a prudent uninsured. And that is making decisions that you would if you were not insured prudently. So, for example, if you've received a legal letter and you've been asked to respond in 14 days and you've submitted the claim, you wouldn't go and make a response a day later admitting fault and accepting the claim. So act prudently and act as a prudent uninsured. Now, as well, the insurer I've mentioned earlier is going to ask you to demonstrate prospects of success for some of these claims, and that will involve getting legal advice and getting the advice which is the solicitor's view on prospects of success in defending this claim. Now, insurers like to use their own legal representatives, and the reason why is that they are very good at negotiating low rates with their solicitors, because they have the benefit of scale and they use solicitors quite a bit. So you do have the opportunity to choose your own legal representatives, but there are some challenges that come with this. And I'm on a body corporate where we actually had a claim where we chose our own legal representative. So the first thing is that the insurer will only settle you based on the rates, legal rates, the hourly rate that it would cost them in the claim. Now, the benefit of using the insurer's representative is that you don't get the bills for their representation. When you are dealing with your own representative, you get the bills, and the insurer will settle you at the time that they make the assessment. And I've got to say, the claim that I'm dealing with, we still haven't had our claim assessed many months for the costs later on. So it can be beneficial sometimes to use your own legal representative, particularly in instances where the solicitor has a background of knowledge of issues. But likewise, it can also be beneficial to use the insurer's representative as well. And finally, insurers have the right to take over the claim as though it was their own claim. And there can often be disputes about the insurer's decision on a particular matter. And the common one that I see is in defamation cases, where the insurer says it's most commercial for you to apologise and offer this settlement. But you've got an office bearer saying, well, I don't think that this claim is a baseless matter. I think this claim is baseless. Giving an apology would impact my position on the committee. Now, you should get very specific advice on what your options are by your advisor at the time. But quite often insurers will say, well, it would cost us this amount. So we're going to give you that amount, which is the settlement and defence costs, and you can pursue it in your own way and be liable for any costs thereafter. Now, obviously, if you defend the claim, then there might be a case to the insurer to say, well, they did incur the extra costs, but they were right to defend this claim. So just the point here is get advice about if you do have disputes over the legal proceedings, speak to your broker and get them to give you advice on what the best options are.
And Tyrone, I just want to really emphasize the point you made there about prospects of success. You need to be asking an appropriately qualified person about prospects of success. Please don't ask me. And I get asked that question a lot, and I say the same thing. I can't tell you if it's going to succeed or not because I am not qualified to give you that. Please take care about who you ask for strata advice, particularly that kind of specialised issue. All right, to me, so I want to stress, and Tyrone I think would want to as well, that we're certainly not here to badmouth strata lawyers. I know plenty of them and they're pretty knowledgeable, thorough and methodical people in what it has to be said is a really tricky area of the law. Complex, technical, unwieldy in some cases. So there are some pros of embarking upon legal proceedings. And I'm just going to go through a couple of instances where it probably is advantageous to embark upon legal proceedings, either as your first step or as a step. So the first one is where clarity is required. And this to me is a situation where maybe you are not locked in a hostile dispute per se. Maybe the parties are actually quite cordial, but there is an issue of a lack of clarity about something. And typically that something might be maintenance responsibilities, body corporate or owner. Clarity might only get there if there is a proceeding determined by an adjudicator, for an example, about or providing a declaration. Where there's also an advantage might be with finality. So if an issue has dragged on for many years in some cases, and it's taken its toll on the parties, both financially and emotionally, finality may well be what may well be something that legal proceedings can give. Self-explanatory, the next one, if there is a complex issue or a question of law, that may well be where legal proceedings obviously are required. So too contractual disputes, particularly again if there are really technical contractual issues at play. Where we talk about settlements and property rights and related, again, legal proceedings may well be what is absolutely necessary in that case. And look, sometimes it's the only option, and that is particularly where legislation kind of demands it. So representation in court or tribunal proceedings, for example. So I want to stress legal proceedings to settle a strata problem absolutely are going to be relevant and in some cases essential. However, there are a lot of cons to that. And I think, and this is purely my opinion, based upon my experience, the majority of strata problems which arise do not require legal proceedings either as the first step or as indeed any step. And why is that? Here are some reasons why. First of all, the cost. The cost of legal proceedings, and Tyrone has touched upon this, can be extraordinary and substantial. Then there is the time that they take. Remember, if we're talking about committees, these are volunteers, and they will be giving up time to engage in those legal proceedings. That loss of time can't be recovered. You cannot underestimate the emotional toll, the emotional toil of legal proceedings. It's not as though you're watching a TV series where it's an exciting back and forth between lawyers in a courtroom and a crusty old judge dishing out lines. It's not quite like that. It goes for a long time and it really takes its toll on people. We're then going to consider, I think, the reputational issue, and this one gets overlooked, in my experience, quite a lot in strata. There are times when a body corporate or an owner's corporation or a strata scheme ends up on the front page of the paper or on a current affair or in some other forum. The most obvious example of that, if I say the words mascot towers to you, everybody understands what that means, and it's not a positive understanding. So think about the reputational damage if you get involved in legal proceedings about a strata issue and what it can mean for you. And what it can mean for you is the next point, a really detrimental impact on property values. A couple of years ago, I did a media piece about the most disputed about buildings in Queensland. There were some extraordinary figures in that. The issue there, why on earth, if I was a homeowner, would I want to buy into one of those schemes? All on the public record, or there to be searched. But the last point I want to make is about the fundamental difference between strata disputes and other kinds of disputes. Strata disputes are not like other kinds of disputes. You might have a commercial dispute, for example, where the issue gets resolved, maybe arbitration or court or a judge, decision made, parties walk away, that's it. Don't see each other again. Not so in strata. You will see them in the car park. You will see them in the lift. You'll see them at a meeting. You might see their name on an email again and again and again. And what that means is that a strata dispute, once one arises, the potential for another to arise out of that same set of circumstances on a different topic in some cases, in my experience, is considerable. So legal proceedings, by their nature, do not tend to address root causes. If the root cause is a personality conflict or an interpersonal conflict or a communication issue, Tyrone's touched upon that with the discussion about defamation, legal proceedings don't tend to address that. So then, alternatives. The first one, and it's an absolute no-brainer, and I just want to keep hammering this point home, your best prevention the best way of avoiding legal proceedings, the best way of saving time, money, and stress is prevention and avoidance wherever possible. Tyrone made that point very clear at the start of this presentation, that a body corporate strata scheme must be seen to be taking all reasonable steps in a given situation to protect itself under or in relation to a claim. And that goes much more broadly as well. Whether you're an individual, an owner, or whether you're the body corporate, you should be taking all steps to prevent and avoid a dispute. And the most obvious way that you do that is that you treat strata as a business. You treat this as a series of transactions to be completed. It's when either a body corporate or an individual slips into emotion, and it's very easy to do, that things go awry very, very quickly and you lose sight of the objective. There's only one objective in a strata scheme, and that is maintaining and enhancing property values. That's it. Then we talk about sort of more specific alternatives. And here I'm talking about discussion, communication, and engagement. It's one thing to discuss with somebody else a problem that you have in a strata scheme. It's another thing to look at holding a very structured discussion with an agenda and a set outcome and where it is convened. That is absolutely something that I do for a lot of clients in a lot of situations. It can get results. Then there is an even more formal alternative, such as mediation. Mediation follows a really set process with set steps and set timings. It can and does get results, sometimes much better and sometimes much more quickly than the formal processes do. Never forget, in a strata situation, there is always the possibility of a last-ditch attempt. And this then leads, I guess, to one of the things that I say a lot to clients. There is a solution for every strata problem. There is a positive solution to every strata problem. Every strata problem has a solution provided for under legislation or elsewhere as well. Never forget that. Never forget that no matter how complex or challenging or emotive a strata situation appears to you, and again, regardless of whether you're on the committee or whether you're an individual or a strata manager or a management rights holder for that matter, there is a solution possible. There is an outcome possible that can finish this completely and allow you to move on with your life. I can't emphasize those points enough.
Thank you, Chris. And Chris, I really wanted you on this particular presentation today because I really want to appeal to policyholders and committees that are watching this to not just jump immediately to lodging a claim and speaking with lawyers, because that is often the most common response for a lot of committees. But I really think that these alternatives are not often explored enough. And that's really why I feel like that this is important for us to both speak together, is just to consider the alternatives. And I guess it leads into my next point. Firstly, don't treat your insurance policy as an open checkbook. I mean, I see some instances where committees are really taking actions that they know are going to result in defending a legal claim and a claim on their insurance policy. And Chris, as you mentioned earlier, quite often one claim is not the end of the issue. It leads to multiple claims down the track. And insurers know this. When insurers see legal defense expenses claims on your claims history, it may not be a big expense, but it is very adverse for your history because they have a concern that that will result in more claims. It's not like a property damage claim where you have water damage and that's the end of it. Quite often these claims can lead to more issues, and that's why insurers look very adversely at legal defense expenses claims. Now, notify your insurer immediately when you have a claim. And the reason why is if you pursue a matter that is prejudicial to the insurer and results in greater costs down the track for them, that can result in the insurer reducing their level of indemnity or denying your claim. Now, as I mentioned earlier, I'm not going to go into this, but if you are making any remarks that might be considered defamatory, what you ideally would like, if there is a defamation claim, is for it to be in the name of the body corporate and not for it to be in the name of individual office bearers, because you've got greater prospects of claiming under your strata policy if you don't have a management liability insurance policy.
And Tyrone, just before you move to the next point, I'll just quickly leap in on that one. While we're talking about defamatory issues, always take care when you are making comments on social media or in response to blogs. Nikki would know this point very well in particular. Everybody on this webinar and everybody watching it afterwards understands that a strata dispute can be really challenging, tough work, emotive. Our emotions get worked up. We get angry. We get frustrated. I get all of that. But if you then hop on Facebook and you talk about your committee member or another owner and you call them, I won't repeat the words, but you call them things that in the cold, hard light of day, you really wish you had not, by then it's probably way too late in the process.
And it only costs someone a few $1,000s to get a lawyer and write a defamation concerns notice, and that can have a very, very severe impact on an individual's well-being and welfare. But I appeal to people to try to resolve claims before they are a claim and consider alternatives to legal as well. And I will say that in some of the policies I've seen, they do extend to not only covering legal representatives' costs, but they can also extend to covering other professional assistance. For example, I would argue that Strata Solve in some instances in complex matters could be engaged as an alternative to legal. And if you've got a $50,000 limit, it may be more cost effective for you to look at alternatives to just going down the legal path. But notwithstanding, I don't want to, badmouth lawyers. They are very vital in this particular, in many legal disputes, and sometimes it is appropriate to use them. Finally, have a clear legal objective. And my biggest what the claim that I've ever came across was a body corporate that decided to engage a lawyer over a noisy air conditioning unit and spent $26,000 in legal fees fighting over a noisy air conditioning unit, and they could have replaced that unit 5 times over at least. So please consider what is the objective that you are trying to achieve in the action. Excellent. Well, look, thank you very much, and Nikki. Now we might hand over to yourself for some questions.
Thanks, Tyrone and Chris. That was fantastic. Looks like we're talking about emotions quite a bit when we're speaking about this topic. So it's great to put that in perspective. I'll just unshare the screen. Now, we just had a few questions come in during the actual presentation asking about legislation in different states and how the relevance related back to Queensland in some instances, and everybody just wanted a bit of an overview on how that relates to their situation if they're outside of Queensland or in New South Wales or other states around Australia.
Yeah, my experience with strata legislation across all of the various states is that they are, in relation to insurance matters, that they are substantially the same. So what I would suggest you do, you can look up, Body Corporate Management Act Queensland or Strata Management Act New South Wales, and you go to the legislation and simply type the word insurance. And if you go to that section, you'll be able to find each particular point that relates to insurance. And obviously for some of the matters Chris speaks about, that might not be the case there, but I'm sure there are ways you can find that as well.
Yeah, absolutely, Tyrone. And I think it's a really good point. When we talk about insurance, the concepts around insurance, as you say, Tyrone, largely the same. The differences lie perhaps in and around how the strata scheme gets to that point. or some of the considerations they have along the way.
Excellent. Thank you so much for that clarification. Okay, we might start with questions. What can an owner do when they suspect a fraudulent claim has been made for a legal defence on Strata Insurance?
Yeah, that's actually a really good one, Nikki. So it's important to know that the owner is not necessarily the insured, the body corporate is. They do have a right to make a claim for legal defence on their policy. I mean, if anyone suspects fraud in an insurance claim, insurers do have, you can obviously contact the insurer and you can report your concerns. I have seen abuses in that instance as well, where someone might try to jeopardize someone's claim and they're not even an insured party to the contract. And I would suggest that insurers in most parts should be very objective when they're looking at those types of concerns that are being raised.
Okay, we move on to the next one. Is it possible to change the OC building insurance so a lot owner cannot make a claim under the policy directly to the insurer? I ask this to ascertain whether the OC can manage its claims history and the adverse impacts of claims unrelated to OC property.
Yeah, that's a good question. Do you mind if I answer that one, Chris?
Go for it.
So look, a lot owner is an insured party to the policy, and it's just very important to know that they are paying for insurance for their building, and they do have an insurable interest in the property. And I always say to my consumers that raise this concern that when you buy in Strata, you buy the claims history of the building, and that is one of the that is simply one of the things that you can't avoid as someone in a Strata building. The only way to avoid that is just to not own in Strata. But the short answer is yes. Someone who pays for insurance and is an insured party does have a right to make a claim on that policy. But notwithstanding, the body corporate can get specific excesses. If there are water damage issues, they can request voluntary hire excesses, or they can recommend owners do things to maintain their property to reduce those claims as well.
Geez, I'm really glad you've made that point, Tyrone, because I've lost count of the number of times I've had that kind of question about, who is entitled to make the claim? How can we prevent owners, occupiers potentially, from making a claim? So your point there about the fact that as an owner, you are contributing to the costs of insurance, so you have an insurable interest. Fantastic point, Tyrone. Thank you. I'd also add that the concept that's being put up here, even if it was something that you could reasonably do, even if you could change the insurance to prevent anybody else doing that, you need to consider the optics of that. How would that look? Even if you're doing it for what seem to be very good reasons, you want to manage the history and so on. How does that look to owners when they are presented with a scenario where something happens to their lot, and quite reasonably and logically they go, I'll make a claim against the body corporate insurance, only to then find out, well, actually your body corporate decided that you wouldn't be able to do that in future. I would imagine, and interested to know what you think here, Tyrone, but I would imagine immediately that entire building goes offside with the committee. Doesn't matter what happened, doesn't matter the circumstances that led there. That is fertile ground for dispute and angst.
Absolutely. And imagine the instance where someone has a severe water damage claim and the committee are trying to block them from claiming, and that person is in a time of need and they need the insurer to come out and they need them to come and, get their property dried immediately and take immediate work. And the committee have tried to block and stop that claim. Again, that goes back to the optics that you're talking about, Chris. It doesn't look good for the committee.
It's a really hard, and I think this goes to a couple of the questions. It's a really tough one because the committee want to do the right thing, tick all the boxes, go by the book, act on advice, and I get all of that. There has to be a kind of human consideration here. And this is why Strata is so weird, if you like, because you are dealing here with financial issues, insurance issues, administrative issues, legal issues, building issues, engineering issues. They're all combined. But then on top of that, you've got human issues. You've got social issues. You've got somebody's home. You've got somebody's investment that, as you just said in that example, Tyrone, they cannot utilise. Imagine for a second how extraordinarily upsetting that would be if it were you in that scenario. I think if a committee member can at least put themselves in that mindset, that's no bad thing.
And we've just been asked in relation to that question that we've just been speaking about, can an owner apply for an insurance claim without Strata Committee permission?
Yeah, so look, the committee, so if the owner goes direct to the insurer, my experience is that insurers do recognise insurable interest, because I presume that there's been a number of disputes that have gone to the Financial Complaints Authority where the insurer has been ordered to consider a claim. So my understanding, based on experience, is that yes, insurers will, particularly in an instance where the committee is saying don't lodge the claim, that the insurer will firstly prioritise insurable interest over the committee's request.
Okay, and also similar to that too, I might just mention we had a question, can a body corporate demand that owners must not accept a cash settlement? As in a recent case, 2 body corporate owners had to have taken a cash settlement but not performed the repairs, and now the body corporate cannot recover or cannot cover from the get covers from the insurance.
Again, I say you do need to treat the insurance policy as though the owner has an individual right to make a claim, and also that they do have some right to determine how that claim is handled inside their lot. Okay, but there are legislative requirements for owners to maintain their lot in good condition. There are other considerations here, and also you know, there may be some ability from the body corporate to compel an owner to show that they're getting the repairs done before they hand the money over to them as well. So there are certain things you can do. It might be worth getting advice from both the broker and the strata manager in these instances before you go and say, sorry, we're not going to give you this money, or you must do this in certain circumstances as well. Yeah.
Okay, we had a question, can the board use the body corporate insurance to defend themselves against action where they are showing unfair and not inclusive actions in favour of the on-site letting agent caretaker who is on the board?
Yes, so the policy will cover claims that are made against the body corporate or against the owners corporation committee, and they are, and the standard of a claim is a written allegation or like a court action, or or in some cases it's also verbal allegations as well. So in short, yes, if someone wants to take a matter to the commissioner's office saying that the body corporate have not acted, you know, the committee have not acted fairly and are favouring the caretaker, then yes, there is there is a potential for a claim under the policy.
I mean, it largely depends on circumstances, of course, Tyrone, but yeah, agreed. Yeah.
And we did have a comment that came through. I mean, New South Wales and Office of Fair Trading Mediation, and I guess the equivalent in other states around Australia, even when it's signed off by all parties, is not legally binding. And this point frequently, if not mostly, is missed or not understood by participants.
It depends very much on the jurisdiction on which you are in and the kind of dispute that we are talking about. There are some instances where a mediation or a conciliation, or sometimes it's called a compulsory conference, absolutely has some legislative recognition, I'll put it that way. And it might actually have an impact on what happens after that point. So more often than not, what that means is if you don't do it, then you can't actually proceed any further. That's certainly the case in the Commissioner's Office in Queensland, where if you have a matter that could be conciliated and you sort of say, well, no, I don't want to do it, or you don't have a certificate saying that you did it, then you typically don't get to go to adjudication.
Tyrone, did you have anything that you'd like to kind of finish up with today before we...
Yeah, as I'd like to say, please consider the alternatives. Don't just immediately jump to a conclusion that when you have a legal issue, you must engage lawyers and you must make a claim. That's really the appeal for today. And I just want to make the point again that legal claims impact your claims history and your premium. So not only are you impacting yourself with the emotional toll, the time, and the time costs and so on, it can also come back to you in premium cost as well. So that's the main point that I'd like to make today. Thank you.
Excellent. Thank you so much. Thanks for the great information as well.
It's really hard to see a light at the end of the tunnel when you are immersed in a tough, complex insurance-related matter in Strata. The thing that I would emphasize, and this I think complements what you just said, Tyrone, is that pausing, stepping back and reflecting on the situation is so essential. When you have been wrapped up in an insurance-related matter in Strata for 6 months, 12 months, 2 years, your ability to be able to look at that clearly and objectively pretty much vanishes at that point. And it's all that you can think of. It consumes you.
Thanks, Chris. That's really great information. If you gained value from this video, please hit like and subscribe to our YouTube channel. If you're looking for information about parking, Strata Insurance, defects and more, head over to lookupstrata.com.au or sign up to our free weekly newsletter via the link in the description box below.